Hello everyone, and welcome to this presentation of the 3 key elements of a winning momentum strategy. Welcome and thank you for coming once again. My name is Primo. I am the president and founder of Specialist Trading, and for those of you who are unfamiliar with my website, we are an educational company. We provide you with the insights, wisdom, and the trading strategies from the floor. My background is in trading stocks. I was a specialist on the floor of the Pacific Stock Exchange for a total of 19 years, so hence we get the name Specialist Trading. Even though my background is in stocks, I've traded just about every market, every time frame, every strategy and system around, and so what I want to do with my website and with my courses and classes is to lessen your learning curve, so hopefully we can shorten it so that you don't have to be trading for 20 or 30 years, and you can gain all the things that I've accumulated in my 37 years of trading, so that hopefully you can get onto that road of consistency. Now I'm going to give you a great presentation today and give you 3 great components to add to either your current trading strategy, or you can use these to put together a strategy as well. You can start using them as early as tomorrow if you'd like, and then we're going to tell you about a special offer we have for one of our most consistent strategies and trading tools. But before we begin, we're required to show you our disclaimer, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these 3 key elements in a momentum strategy, but please remember that we can in no way guarantee that any of the results I'm about to show you will be repeated. So as you're taking a moment to view our disclaimer, also like to mention that if you have any questions, kindly wait till the very end of the presentation. It seems to flow a lot better if we wait till the end, so if you happen to have a question, just write it down. I promise I'll get to each and every one of your questions. Also, we always leave you with an email address as well as a phone number so you can contact us directly and ask us a question in person if you'd like. Okay, so lots of ways to ask us questions. Just kindly wait till the very end. Now, I see we have a fairly large group here. Some of the people are actually members of Specialist Trading, but we also have a lot of people who aren't, who are prospective members. And once again, as I stated, we are first and foremost an educational company. I'm trying to teach you all the things that were basically taught to me that were able to turn my trading around. I struggled for years when I first started trading on the floor of the stock exchange, and it wasn't until I was able to turn my way of trading around that I got on that road to consistency. And I know a lot of you may be experiencing that right now. You may be having some great months followed by a disastrous month where you give everything back. That's probably the way 99.9% of all traders trade. They're riding high in April, shot down in May. What we're trying to do with Specialist Trading is to teach you how to trade with the specialist edge, and that specialist edge is grounded in simplicity and in consistency. So we're not trying to go for home runs, even though we may get those every once in a while. We're really trying to go for these nice golden nuggets so that you have a nice upward slope in your profit and loss statement. All right, we don't want to have that type of roller coaster approach where you're having tremendous months and then you give it all back. That will not get you on that road to consistency. What will happen more often than not is that you'll blow out your entire account. And we don't want to do that. So my goal is to teach you the same things that were taught to me that were able to turn my trading around. And that's the specialist edge. Okay, so even though we provide our members with strategies and with signals that were generated on a nightly basis, we're more about teaching you how to spot these things on your own so that ultimately you become a part of the process and you don't have to rely on us to furnish you with signals or any type of strategies. You can spot them on your own. All right, with that said, here's what you're going to learn today. Remember I said this is an educational company and you're getting a free course right here. We're going to teach you these 3 main keys to putting together a consistent momentum strategy. The first one is we're going to show you how to trade in sync with the market. I know a lot of you have an idea or have been taught what it means to trade in sync with the market. We're going to teach you probably our most powerful tool for doing that. Then we're going to go to key number 2, which is a price bar pattern that you should look for in every setup you have. All right, you shouldn't have any type of trade setup, whether it relies off fundamental news or whether it relies off the phases of the moon. It doesn't matter. You should have this price pattern in your setup to go long or short. And then lastly, we're going to show you a really great entry technique for fine-tuning your entries. Many times you're on the right path. In other words, you have a signal that tells you to go long or to go short. It's just that your entry is faulty. And so many times you'll get stopped out because you entered either too late or too soon. So this is a great entry technique that gives you confirmation that most likely things are going in your direction. So these are the 3 things you're going to learn today. Take out your notes so that you can make sure you understand them. But don't worry if you're not writing with any notes. Probably the most common question we get beforehand, is this webinar being recorded? And yes, it is. At the end of the presentation, I will give you our email address as well as a phone number where you can contact us and request a link to this particular recording. Okay, and also for those people who just happen to join us, remember this is a fairly large class today, so please, if you have any questions, kindly wait to the very end. I won't even open up the question and answer box, so if you happen to write a question, I won't even see it. So just wait till the end in about a half an hour from now, and then I'll start to answer any question you may have. All right, with that said, we're going to also give you strategy number 4. We're going to share with you how all of these 3 components come and formulate probably one of our most consistent strategies, and that's strategy number 4. So we'll go into that at the very end as well. All right, so let's talk about buys. All right, first of all, let's talk about how we can apply these components if we're looking to go long. And key number 1 states that we must always trade in sync with the trend. I know you've all heard of this, and I'm sure you're all familiar with this, but one trader's uptrend is another trader's downtrend. There are literally 1,000,001 ways to discern what the trend is. A lot of people like to look at the higher time frame to confirm what the lower time frame trend is. A lot of people look at indicators. A lot of people look at news. Well, everyone has a different idea of what the trend is. A lot of people look at price pattern. We, in our opinion, have found probably the simplest and the most powerful way for discerning the overall trend. Here's a perfect example of what we're talking about. Now, someone just looking at this overall chart would say, well, Steve, off face value, there actually is no trend here. Now, we purposely removed what this was because it doesn't matter what market you're looking at, whether this is a 5-minute chart of the Emini or a monthly chart of the Australian dollar. It doesn't really matter. Off face value, someone would say there really is no trend. We're just kind of going sideways. We're in a range market from down to up to back down. Okay? Well, actually, there is a trend. If we use our buy-sell line, which is our powerful trend determinator, this is what will help you find out the overall trend. And all that simply is the 50-period simple moving average. Okay? So whatever market you trade, whether it's currency pairs, whether it's the Forex markets, or whether it's the stock market or the E-mini market, it doesn't matter what time frame. Always have a 50-period simple moving average plotted. And the first thing you want to do is ask yourself, where is price in relation to that 50-period simple moving average? And so we see here that price is above, so this means the overall trend is up, and we're only going to be looking to go long. It's that simple. That's all you have to do. You don't have to look at the higher time frame to discern what this one is. You don't have to look at price patterns. You don't have to look at anything else to determine what the overall trend is. All right, now that we know the trend, let's go to key number 2, which is we want to look for a bar that closes in the top 25% of its range. Why the top 25? Because we're looking, in other words, we found that the trend is up, so we're looking for a momentum move in that direction. So the best way we can see that the momentum is going to carry us upward is by the chart bar closing in its top 25%. This is a great clue that the market is giving us. Whatever market we're trading, it's telling us that most likely we're going to go higher. Okay, so if we look at that same chart again, we see the price is above, so now we want to find all the bars that close in the top 25%. So these are the bars right here. So these bars are giving us clues that most likely we're going to head higher. All right, we're not listening to some chat room or some trading guru telling us what the market's going to do. We're listening to the most important thing, which is the market itself. It's giving us the best clues we can get from anything. Okay? Remember, I said the specialist edge is rooted in simplicity and consistency. And this is extremely simple, but it really has great consistency edge to it. And finally, key number 3, once we put these two things together, key number 1 and key number 2, is now we want to look for some type of entry technique. And we're going to enter upon the confirmation of trend. Well, what exactly does that mean? Well, here's the confirmation method in this context. It means that we'll buy on the next bar only if price trades 1 to 5 ticks above the bar that closed in the top 25% of its range. So in other words, we want to find those bars that we have here in green that closed in the top 25%, and we want to see that the next bar exceeds its high by 1 or 5 ticks. Now, as we can see here, this one never did on the next bar. We never got up that high, so there was no momentum to carry through. On this bar right here, we actually did exceed it. So there was a little momentum that carried us through, a little higher. Okay? There's where you would have entered. And then lastly, on this bar here, well, we exceeded again on this next bar, so you would have entered right here, and look what happened. You see how simple this is. Key one is we want to see where price is in relation to the 50 periods of moving average. Key one. So that tells us that the overall trend is up. Since the overall trend is up, we're looking for bars that close in the top 25%, as we see right here in green. Okay? When we say top 25%, we mean take the range of the bar from top to bottom. It's not from open to close. It's from actual overall top to overall bottom. Okay? And in the top quarter, if you closed in the top 25% of that range, okay, so if you see here we're in the top 25%, we're in the top 25%, then we want to apply this confirmation technique. We want to say that if we trade above that on the next bar only, we're most likely going to continue direction, as we did here and as we most definitely did here. It's that simple. We're just listening to the market. The market has given us all these clues telling us what direction it wants to go in. So we don't need to be in some trading room. We don't need to subscribe to some newsletter. We don't need to be watching the news at all times. And we don't need to have 20 or 30 indicators on our screen. And I know this firsthand because that's the way I used to trade. I used to have all of those things on my screen. I used to listen to tons of news events, and I couldn't make ends meet. Maybe I'd have one or two good trades, and then I'd give it all back. So there was no consistency. It wasn't until I started applying simple things like this, which are based off what the market is doing, not off an outside source telling me what the market's going to do, that I started to get on that road to consistency. All right, so we looked at how to apply these three keys to buys. Let's look and see how would we apply them to sells. It's basically the same thing, the same concept, but in this context, all we want to do is reverse everything. So we want to be in sync with the trend. And once again, if we look at face value at this chart here, doesn't matter what time frame or what market this is, someone would say, well, off face value, there is no trend. We've gone higher, we've gone lower, we've gone higher, we're going sideways. Well, not according to what we teach at Specialist Trading. We want to apply a 50 period simple moving average. And then we ask ourselves, where is price in relation to that 50 period? Price is below, so that means the overall trend is actually down. We're not going sideways. We're not in a range. We're actually in an overall downtrend. Okay? Key number two, now since we're in a downtrend, overall, we're going to look for a bar that closes in the bottom 25% of its range. Okay? So look for those bars, and we have a lot here, as we have shown in red. So these are these setup bars in the bottom 25% of the range, okay? As you see here, when we say range, we're talking about from the very top. In this instance, we're using candles, but it doesn't matter if you're looking at candles, if you're looking at open, high, low, close bars. We just want to know the exact high of that bar and the exact low of that bar. What is the range? Say it's 4 points. Well, if it's 4 points, well, then we want to see that it closes in the bottom 1 point here, okay? At the bottom quarter of the entire range from top to bottom. And then once we've done that, then we can apply our confirmation method. Remember, that is simply we're going to sell or go short on the next bar only if price trades 1 to 5 ticks below the bar that closed in the bottom 25%. That's it. So as we see here, these bars all close in the bottom 25%, so we want to trade just below that. And we did right here for these first 3 bars. There was a little carry through, but not much momentum. So you either would have been stopped out unchanged or broken even on this trade, or maybe a minor loss. But on this particular setup, you would have entered right here on the very next bar. It traded below, and then look what happened. Okay, so momentum finally kicked in. We're not going to say that this happens 100% of the time. Oftentimes you'll go short and get into a trade, or if it's above the 50 period, you'll go long, and things will still kind of go downward to sideways for a while. But overall, remember, we're looking for consistency. We're not looking for home runs. You will ultimately get this trade where it really kicks in on the momentum. And the beauty of this is that you can apply this to all these other bars that closed in the bottom 25%. And you could use these to go short and to sell into those. All right, so now let's see how all these 3 keys, these 3 elements of a very consistent momentum strategy fall into place and create probably one of our most consistent strategies to date. That's strategy number 4. It's an excellent strategy. I've been trading this for years. Probably our most consistent strategy of everything we have at Specialist Trading, because it fits into any market. We have some strategies that are more consistent, but they only trade the E-minis or they only trade the Forex currency pairs. Strategy number 4 virtually trades everything and anything, any time frame, any direction, any market you want. That's how consistent, and that's how well it transfers over into anything. So it's a great strategy. I use it just about every day almost, but let me show you some of the highlights of strategy number 4. As we said, it's for all traders, from beginners to advanced. When we have new members who take the strategy number 4 course, some of them are beginners who've been trading for just a couple of weeks. Others are hedge fund managers who have been trading for 20, 30 years. They all get the same rules. There's nothing different for someone who's been trading for a couple of days as opposed to someone who's been trading for a couple of decades. Okay, so that's how simple this strategy is. It's for traders looking to catch quick momentum moves. All right, so we teach you ways to stay in this trade longer if you like, but usually if you just trade the standard method, you're in and out very quickly. All right. On an intensity level, though, from 1 to 3, with 1 being the most intense, 3 being the less, it's right in the middle. So it's not really intense at all. It's a very moderate strategy to trade. It uses only one indicator. It uses the 50-period simple moving average, which is the buy-sell line. It doesn't get any simpler than that, okay? So that's all we're looking for in terms of indicator-based strategies. We're just looking for where price is in relation to this 50-period simple moving average. The rest is we're just looking for simple rules to fit a pattern. Remember, this works on any time frame, any direction, and in any market. As I stated in the very beginning of this presentation, our edge here is consistency. I'm not going to sit here and tell you that every trade works 100% of the time, but over time, this has tremendous consistency to it. We have this 2 steps forward, 1 step back approach with strategy number 4. We keep our losses to a minimum, and if you want, you can let your profits run. We teach you how to do that. But mostly, you're in and out very quickly with a nice quick trade, and you can go on and look for the next one. If you're day trading or if you're a position sizing overnight, it's pretty much the same rules to trade the standard format. Now I'm going to show you some examples using this, and you'll see that all 3 components which I just shared with you are in this particular strategy. In fact, out of the 5 or 6 rules in this particular strategy, they encompass just about half of the rules. Okay, can't give away everything for free in terms of stop placement or exit, because then it wouldn't be fair to the people who actually purchase strategy number 4. But I'm going to show you exactly how these setups happen on charts. First of all, I'm going to show you some older charts just for educational purposes so that you can see how they work. And then I'm going to show you some charts that happened just as late as yesterday. Okay. All right, so let's start out with stocks. We're looking here at UPS. All right, so first thing we look at and we ask ourselves for key number 1, where is price in relation to the 50-period simple moving average, okay, which is this green dotted moving average. Obviously, price is above. So this means the overall trend is up. We're not even going to consider going short. So you can do this right now. In fact, I would ask all of you to go back and look at your last 10 or 20 trades, plot that 50-period simple moving average, and I can almost guarantee you that your losers were because you were out of sync with the 50-period simple moving average. Now, in this particular case, we see that price is above the moving average, so we're only looking for long situations here. And we see these 3 scenarios where we have bars closed in the top 25%. Now, this means we could go long if we traded on the very next bar above that. We never did here, so there's no setup. How about this situation? No, there's no setup. We never got up that high. But on this particular setup right here, which was just about 2 or 3 months ago, we did trade above in UPS. So that was your entry right there, roughly about 90, 90 and a half. And as you can see, look what happened in the next 2 or 3 weeks. Okay, momentum kicked in. Now, if you wanted to trade the standard way to trade strategy number 4, you probably would have been in and out of this in about 3 or 4 days. If you wanted to stay in longer, you probably, looking at this chart right here, would still be in the trade according to our proprietary ways of tracking the trade. How about to the sell side? Well, here's a chart of IBM. Obviously, the overall trend is down. Why? Because price is below the 50-period simple moving average. You see how simple that is. There's no way you have to look at anything else. You don't have to look at a weekly chart of IBM to determine what the daily chart is. We don't care. All we want to look at is the chart we're trading. Now, in this case, it was a daily chart, so we just apply the 50-period simple moving average. Can't get any simpler than that. Then we see these bars here that closed in the bottom 25%. Remember, you take the top of the range to the bottom of the range, and then we see where price closed, and it closed in the bottom 25% of that entire range. Doesn't matter if this is an open, high-low, close bar or a candlestick. We're just looking at the top to bottom range. And then if we traded below that on the next bar, that's your entry to go short, and look what happened. Here was another setup right here to go short, and this is what happened, and another one. So they all would have been in your favor. See how we caught momentum. Now here's a current trade. I told you we're going to show you some things that happened recently. This was just a couple of weeks ago in Textron TXT. Where is price in relation to the 50 period? Price was above. So we're only looking for buy setups. All right, so we look for bars here that close in the top 25% of the range. Well, so far we haven't found one until right here. This was on the 14th. This was just a couple of weeks ago. So this was our setup, and we would only go long if we traded 1 to 5 ticks above this and on the next bar only. Well, let's see what happened on the 15th. Actually, it did trade above there. So you would have entered long roughly about 35 and a quarter, 35 and a half. And in the next week, you made roughly about 4.5, 5 points. Okay, you see how you just simply caught momentum there. You weren't in any chat room or trading room. You didn't have to waste your money or time having to listen to someone else tell you what to do. You listened to the only thing you should be listening to, which is the market. The market told you everything you need to know. How about the Emini? Well, if you want to trade the Emini, you can go down to intraday trading, and we'll take some older charts here. This was in November of this past year. We're above the 50-period simple moving average on this 10-minute chart. We find the bars that closed in the top 25%, and if you would have entered on the next bar only, look at these nice buy signals you would have had on a 10-minute time frame. This also works if you're selling the Emini. Here's a 3,000 tick bar chart. Now, in this particular instance, we started off the day below the 50 period, so we're only looking for sell setups, and here's a great one right here. Could have given you about 2 or 3 points in the first half hour of the day. And then once we crossed over, now we're looking for bars that close in the top 25%. You had a couple of signals right there. Now, here was a chart, a recent chart. This was on the 24th. This was just this past Friday. All right, do you remember when the market was down roughly about 200 or 300 points? A lot of people were saying, boy, there's no way a small guy like me can make money when the market gaps down like this and goes lower. It's just, there's no way I can get in the way of the big boys here, and this market is just terrible. At specialist trading, we don't care what the market is doing. We don't care what the news is. We only listen to what the market is telling us. So the market was telling us on a 5-minute time frame, we're below the 50-period simple moving average. So this means we're not going to try and bottom fish. We're not going to try and pick a bottom, because if you did on that day, you would have most definitely lost money. All we're doing is being in sync with the market, remember? So if price is below the 50, we want to be in sync with it. So we're only going to look to go short. And where these red arrows are all bars that closed in the bottom 25% of their range. And then you could have shorted once they were traded 1 to 2 ticks below on the next bar. These all would have been profitable trades. This was just last Friday. All right, let's look at the Forex markets. Let's look at some older charts here. We see the euro dollar. For all intents and purposes, we are above the 50 period. We were only below for a short time, but for most of this time period last year, we were above. And so we see here all these buy examples where we could have gotten long on bars that closed in the top 25% and then carried over on the next bar. And the same thing works to the downside. If we look at the Australian dollar, we're obviously below the 50-period simple moving average. So we look for bars that close in the bottom 25% of their range. And then if we exceed that low on the next bar, that's our entry signal. All right, so let's recap really quickly. Now remember, we gave you these 3 key elements, and you can apply these virtually to any strategy you're trading. Let's say you have a strategy that's based off of the news. That's fine, as long as you apply the 50-period simple moving average. You're in sync. In other words, if you see that the news comes out and it's very good news in your opinion, but price is below the 50-period simple moving average, I would not buy it, because you're going to be out of sync. Now, if the news came out and you discerned that it was very positive news and price was above, well, then you are in sync. So it's okay. You can still apply this to your current strategy. Then you want to look for a bar that closes in the top 25% of its range if it was a buy signal, or in the bottom 25% of its range if you had some type of a sell signal in your current strategy. I wouldn't even consider entering a trade with my particular strategy unless I saw this bar, because this bar is a great clue coming from the market itself, telling you that it's most likely going to carry over in that direction. So what better clue can you get that a bar closing in the top 25 or bottom 25% of its range? And then once you find that bar, then simply use the entry technique if you'd like, rather than just say, well, I got a buy signal, we're above the 50-period simple moving average, I'm going to buy at the market after I see this bar that closes in the top 25%. No, wait for confirmation, wait for price to trade above that bar that closed in the top 25%. Or if you got a sell signal and you're below the 50-period simple moving average and you have a bar that closes in its bottom 25% range, don't simply sell at the market or put a limit order in. Only sell if we trade below that bar that closed in the bottom 25%. Now you're putting the odds in your favor and you just have confirmation that you're headed in that direction. I gave you a lot of examples where bars closed in the top 25 or bottom 25, but they never went above or below on the next bar. So there was no momentum, so we never would have entered. You wouldn't have lost any money. So that's why we use confirmation, just to make sure that we're confirmed we're going in our desired direction. So these are the three key elements. We employ these in probably about 3/4 to 90% of all of our strategies that we promote at Specialist Trading, regardless for what market. They're all based off different things. Some of our strategies are momentum-based, others are indicator-based, others are based on totally different pattern recognitions, but we usually incorporate anywhere from 2 to 3 of these in all of our strategies. So these are important tools that I just shared with you. We usually just reserve this information for members of Specialist Trading, but we're sharing this with you today. Now remember, this is not a full-fledged strategy. I know a lot of you will say, well, Steve, so where do I place my stop? Where do I exit? Well, those are other components you need to have a full-fledged strategy. What I gave you today were just 3 pieces of the puzzle, all right? Now, in order to have a full strategy, you need to know about money management. You need to know about how many shares or contracts to trade. You need to have exit techniques. You need to know if you're going to track the trade to stay in longer. You need to know if you're going to be trading aggressively or conservatively. Now, what I want to share with you today is strategy number 4. This is probably our most consistent strategy. We just shared with you some of the actual entries and exits, and entries for long and short. I'm sorry. But we didn't share the entries and exits in terms of all the full strategy because it's just for members only. But I want to invite you all to become members by giving you a special offer today. As you see here, this is our strategy number 4 for stocks, E-mini, ETFs, and Forex. It's a tremendous strategy. As I said, I trade it just about every day. I trade it intraday or sometimes overnight basis, but mostly intraday. And I can trade it in any market and any time frame, as you'll see here. And what we want to share with you today is that we're having a very special 2-for-1 attendee special. Okay, so what does that exactly mean? Well, this includes the PET D, which is probably one of our other most valuable tools that we have for our members of Specialist Trading. This is the Primo Early Trend Detector. For those of you who have not heard me speak about this before, it's a proprietary color bar algorithm. And what it does is, if you see a series of green bars, it just tells you that you're in a short-term uptrend. Remember, the 50-period simple moving average was for the overall trend. But a series of green bars in the PET D gives you the short-term trend. Many times, this is a best-case scenario. You'll see all the bars green. But oftentimes, if you just see the majority of bars green, that's good enough. And it just tells you that you're in a short-term uptrend. Whereas a series of red bars just tells you you're in a short-term downtrend. Let me show you how valuable this tool is. All right. Here's a current chart of UPS. I took this chart. It's actually valid up until today. Now, we see here that coming in at the very end of the year, we had a nice run-up, and then we fell out of bed here at the very beginning of the year. If we apply the PET D, which is a color bar tool, you see here that all these bars were green until this very first bar here, which was red, giving you a clue that the short-term trend had changed, and they remain red the entire way down up until today. So do you see how valuable that is? If we look at an intraday chart, well, this was just on the 27th. This was just Monday, okay, of a 5-minute chart of the E-mini. Now we see here we had some kind of wild swings. Someone could have said, boy, it was difficult trading the market today, not getting an edge on what the short-term trend was. Well, if we just apply the PET D, look how that could have helped you. All right, there was a majority of red bars here coming all this way down, maybe a splattering of 1 or 2 green, but the majority were red. Then we had the majority of green telling you that short-term trend was up, and then the majority of red on the downside. Do you think that could have helped you in your day trading of the E-mini? We see this happen time and time again. And I think here's the most valuable thing about the PET D. If you want to use it long-term, all right, rather than just an intraday trading tool, you can apply this to your portfolio. Now let's look at a 10-year-old chart, roughly, of the S&P index, which we have here going back to 1994, 1995. Look at the wide swings here. If we just look at the day, or I should say monthly bars, all the way up until we hit 2000 and the we had the crash here of 2000 with all the internet stocks falling out of bed, and then we bottomed out in 2002 or 3, and then we had a really nice rally until the banking crisis of 2008, and then we fell out of bed, and this is what we've been doing since 2009, slowly but surely coming all the way back, making new highs. But looking off this at face value, in hindsight, it seems easy to track, but while you're in there in your portfolio, wouldn't you have liked to have known when you could have gotten out, when the market was going to top out, and when you could have gotten back in? Well, all we have to do is apply the PET-D, and look how this tool could have helped you. As soon as we turned red here, you could have gotten out of your portfolio, missed all this sell-off, and then gotten right back in 2003 to ride all this wave up. And then actually before 2008, in the end of 2007, you could have exited and missed all of this and gotten back in 2010 and basically been able to ride this all the way up with some help from our type of money management we could share with you in the course. So do you see how powerful, how simple this color bar tool is? All you have to do is apply this, and the best thing about this is we are sharing you this with a 2-for-1 discount with these individual courses. Now, if you purchase them individually, it would cost you roughly about $2,000. We're discounting both of these strategies and courses, strategy number 4 and the PET-D tool, down to $14.95. But this is for 2 days only. All right, we're only going to do this for the next 2 days because we're going to probably be talking about something else coming in to February and March. So this is a great deal if you want to get instant course access. You don't have to wait for anything to be shipped or mailed to you. Detailed instruction, many videos. We also tell you about entries, exits, and stops, more information, more advanced information. We provide you with signal alerts on an email basis when they occur on a nightly basis. This includes weekly videos and trading lessons. Also includes both add-ons. So you'll get the add-on for strategy number 4 that automatically generates up and down arrows, buy and sell arrows on the chart as they appear. You'll also get the add-on for the Primo Early Trend Detector, the PET-D, which colors the bars for you automatically. Remember, if you purchase these individually, it would be roughly about $2,000. For the discount for the next 2 days only, we're dropping it down to $14.95. Now, I know some of you may say, well, that's still a lot too much for me, Steve. Well, let me show you how powerful this is in the last couple of days here. Wouldn't you have liked to know that on the 23rd, the PET-D signaled a red bar, telling you that if you were long the market, you should get out or at least tighten your stop so that if we went below here, you would be out and you would have missed all of this downward move, which was up until about a half an hour before the market closed today. Okay, this is today's chart. Now, we're not saying that everything works this great, but don't you think this could have saved you a lot of money? Probably more than $1,500 in my opinion if you were long. And don't you think you would have liked to have known this? You could have started looking for short setups in different charts and different markets you're looking at. Okay, this was on the 23rd that the PET-D signaled its first red bar. As you can see coming into this, we had nothing but green bars telling you that the short-term trend was up. So this is a great tool to show you not only past reference on how it worked going back months or years, we show you how well it worked in the last couple of days. Once again, this is only for the next couple of days only. You're going to get 2-for-1. In other words, the Primo strategy number 4 that can be applied to stocks, ETFs, Emini markets, and the currency pairs, and also the PET-D. Both of these also included with both add-ons included as well. Lastly, you get my personal email address where you can contact me anytime. Send me an email if you're not understanding how something works or you didn't understand if a particular signal was generated or why. You can contact me and I'll get back to you as soon as possible. Usually within the same day I'll answer all questions. So this is a great deal at $14.95 for a limited time only. If you're really serious about taking your trading to the next level in 2014, I strongly urge you to take advantage of this great discount. Now, for any questions, I'm going to answer any questions you may have now, but any questions referring to the particular discount we have or to the particular markets we trade or different strategies, contact ProTraderStrategies.com. That's our sister site which markets all of our strategies. You can contact our trading consultants at trading@ProTraderStrategies.com. And lastly, you can call us directly at 310-598-6677. I also want to mention that we have payment plans available. So if you're interested in a payment plan, you can also do that. Usually we have that for a higher priced inventory. Some of our courses are anywhere from $3,000 to $5,000 and we have payment plans. But we will also accept payment plans only in the next couple of days though if you're interested in taking advantage of that great discount for these 2 strategies in one. Okay? So I want to thank you for waiting. Let me open up the question and answer box and see if there are any questions here, which there are. Let me go back. What is one tick worth in dollars? Well, one tick is just simply an increment. It's basically 1 cent. In other words, if you're looking at stocks, it's 1 cent. If you're looking at the Emini, one tick is basically 25 cents or so. Or I should say one tick is $12.50 because each contract in the Emini is $50. So if you one tick is basically a quarter of that. And then lastly, one pip in the currency pairs is different because they're all different based off of the currency pair and the different markets. So you have to check with your broker for that. Okay, but basically one tick in a stock is 1 penny, 1 cent. Next question is for Carrie. Do you use the very next candle to enter or any subsequent candles? That's a good question, Carrie. This basically is just the confirmation method as it applied to strategy number 4. Because we're trying to catch momentum, we usually want to use the very next bar. It doesn't matter if it's a candle. It doesn't matter if it's a standard open, high, low, close bar. We just want to make sure that the very next bar either trades above if we're going long or below the low if we're going short. Why? Because that means there's momentum in there. If there's not any momentum, then the market most likely won't exceed the high of the previous bar or exceed the low. So in strategy number 4, we want to enter on the very next bar. Okay. Let's see. Will a recording be made available? Yes, Richard. These are all recorded. Simply contact the email address or the phone number. Okay. Is the PET-D platform dependent? What it is, Jaya, it's a add-on. In other words, you just simply upload this tool onto your charting software, and it's available for TradeStation, for Metastock, for NinjaTrader, and for MT4. So it's available for those major platforms. So if you have any of those, you can simply just apply the upload of that, and it'll automatically happen. And that's with Strategy 4 as well. Okay. Tom is asking, is there any refund policy for the trial period? Tom, I'm sorry, this is 37 years accumulation, and trust me, I use all of these things, and we've had trouble before with people taking our information, and we give you everything. We give you tons of information, all of this strategy, things that you really need to know, and once the customer knows the information, you know, who's to say that they're not going to sell it or share it with other people? So we don't have a refund policy. Basically, our refund policy is if you're not happy, we'll set you up with another strategy, something we have. But that's something you can talk with our trading consultants. But as I said, these are things that I currently use, and basically our integrity is really our refund. So if you're not sure about how true or how standard these things are and how much you can trust them, just do a Google search on Specialist Trading or on myself, and you'll see there are not a lot of people that have been complaining about any of our products or any of my teaching. Because really, you know, I'm a trader first, and I know I wouldn't want to sell something to someone that I knew that they didn't get anything out of. So I'm there with you every step of the way. It's almost like a private mentorship. So not only do you get the rules, you also get my personalized teaching and my correspondence through email. So this is all part of our policy, and really our integrity is what we you know, vouch for. Mike asks, number 3, next bar follow through. Enter on 1 to 5 ticks above the close or high of number 2 candle. Well, actually, I don't know when Mike, when you say number 1, in other words, the bar that closed in the top 25%. Okay, that's your setup bar. That's the only thing. Now, the very next bar, if you want to call that bar number 2 or whatever, should trade above there. And it doesn't have to close above there if that's what you're asking. All it has to do is just trade intraday or interbar above the previous bar. And that's it. So any bar that closes in the top 25% that meets all of the other rules, okay, that's your setup. And you just want to see the next bar trade above that. That's it. Now, if you have a short setup that closes in its bottom 25%, well, that's a short setup. You just want to see the next bar trade below that intrabar. It doesn't have to close there, just as long as it's intrabar, okay? Next question, what do you mean by intensity level? Well, anyone who's been trading a lot for many years know that different strategies are different from other ones, okay? Some strategies you can trade and just sit there, and they're almost kind of very boring. You just kind of have a few rules, and you sit back and watch, and you know, you just kind of have to sit. It's like fishing. You just kind of sit back and wait. Now, other strategies, because they're maybe only akin to certain markets, or because you have to do some things very quickly, are very intense. You don't get to sit back and relax and read the paper. You have to be watching it at all times. So we call that a very intense strategy. So if you take from 1 to 3, this is right in the middle. It's very moderate. Now we have some other strategies that are basically intraday strategies that are more intense. Strategy number 6 for Emini, for example. That's something that you constantly have to monitor. You can't kind of go up and make yourself a sandwich while you're in a trade setup. You have to sit and watch it at all times because it's very quick. Whereas strategy number 4 is not like that. You can, you know, take a walk with a dog if you like, and then come back. It's very moderate. So it's not intense by all means. Dennis asks, entry, buy 1 to 5 ticks above the close or above the high of the last bar. Yes, and remember, this is just an entry technique. Remember, the one thing I want to stress is I did not give you a full-fledged strategy today. I gave you 3 key elements that make up a winning strategy, a winning momentum strategy. But I did not give you a full strategy. So please don't feel that, well, Steve gave us a strategy and this is what we should trade tomorrow. No, what I'm asking you to do is apply this to your current strategy, or if these 3 things interest you, if you see the consistency in it, if you see that the integrity behind what we're sharing with you, well, then we want you to become a member and purchase strategy number 4, which incorporates all of these 3 things, okay? But you can still take these 3 things and you can monitor them and say, well, you know, let me monitor them in paper trade for the next couple of days and let's see how they work. And I'm sure you'll find that there is a lot of consistency just applying these 3 things to any strategy that you currently trade with, okay? Patrick asks, what if the 50-period simple moving average is flat? That's a good question. We like to, if you want to trade more aggressively and you're thinking about going long and price is above the 50-period, well, then you obviously you want to see a 50-period simple moving average that has a nice upward slope, okay? If price is above and the 50-period is flat, it's still okay to take signals. I have taken some very good signals and very good trades when the 50-period is flat. But if you want a little bit more odds in your favor, well, then wait for it to be sloping upwards if you're going long, and wait for it to be sloping downwards if you're going short. So you can take whatever you want. That's why we say these are strategies. A number of people have difficulty with that because they say, well, they want to trade the same thing each and every time, which is a systematic approach. Let me just repeat this. We do not teach or trade systems. Okay, I've traded systems in the past, and the only difference is that with systems you have to do the same thing each and every time. All right, so there's no room for any type of insight or process on your part, because it doesn't matter if you're in a rangy market or if you're in a very momentous market, if it's a lot of volatility, you are going to do the same thing each and every time. But with strategies, they are 70% rule-based, and they give you about 30% discretion, meaning that you can use your insight. If you see something that you've seen before in past experience or something I've taught you, you can say, well, you know what, I'm going to use the standard or I'm going to use the aggressive approach now, or I'm going to use the conservative approach. This is your insight, which makes you a part of the process. You can't do that with systems. So we teach you this insight, either from things I've accumulated in 37 years or things that you've seen on your own, to use and how to apply it within the strategies that we teach. Now, once you use this insight, you see that with strategies, you cannot have any back testing because there are 1,000,001 ways to trade them. We can have 2 traders with the same strategy signal, and they can trade totally entirely different ways in which to enter, different ways in which to exit, different ways in which to place their stop, different ways while the trade is in process. So there's no way to give you any type of stats. I know people always ask, well, what is the win-loss ratio of strategy number 4? There's no way to say that unless we do the same thing each and every time. But trust me, none of our members trade the exact same way. We feel that is a crutch. We want you to, formulate the strategy to meet your needs. So if you're a conservative trader, we teach you how to trade it conservatively, using the ground rules, but just using some conservative techniques as well. If you're an aggressive trader, well, you use the same rules, like same ground rules, but we teach you some aggressive techniques, okay? So I hope that explains a lot of questions that may be coming up here. Gordon asks, are the algorithms for the strategy and PET-D viewable for clients as my software is a niche and not widely used? For the strategy number 4, yes, they are. We teach you all the rules, but the PET-D is a proprietary color bar algorithm, so we can't really disclose that. So I'm sorry if that doesn't take happen to take with your charting software. There are ways to get around that, and I would suggest talking to the people at the trading consultants at Pro Trader Strategies, and they can help you with that, okay? Tom asks, does the color bar print real time? Yes, it does. I use it every day in my intraday trading. It prints real time. As the bars are changing, it tells you if you have a series of green bars to stay long in the short term or a series of red bars to stay short on the overall short term. One of the best ways to use this is if you are below the 50-period simple moving average, the way we were for a good part of today, let's say on a 5-minute time frame. Well, when the bars turn green on a 5-minute time frame of the E-mini, you don't want to buy, you're simply out of the market. But once they turn red again, that's your signal to get in. So it's a great tool for intraday trading. You can use this for daily trading as well. It's a great, great tool to apply with the overall trend. Astor asks, is 25% bar pattern more profitable than an engulfing pattern? They're two totally different things, Astor. The engulfing pattern is also showing you momentum, but it's more of a reversal pattern, where the 25% is more of a momentum pattern, but they're both great clues that the market has given you. Now, we employ both in different strategies, but today we're just talking about the 25% level, okay? Can you show what the PET D showed intraday today? Curious how it predicted the moves. I can't really today because this is a PowerPoint presentation. It's a static, but if you go to, here's what we can do. We've posted a couple of very recent short-term charts on our Twitter page. So you can go to, I'll give you our contact. It is at Specialist Trading, and it's abbreviated, so it's at SPCLSTTRADG, okay? And that is our Twitter handle, and you can go there and you can see some of the postings we had. Now, on our Twitter page, we provide you with a lot of information, but we don't give you the entries and the exits. We simply tell you what we are currently doing. So the members get all of the first-class information, okay? The Twitter page just shows things after the fact. So you're kind of learning after the fact. Now, one of the things we did show for our members was another strategy that we currently had that I talked about in the last webinar was a short signal in the market. And we did that. We posted that last night, and most of our members made upwards of 10 to 12 points today just taking that particular signal. So that was an entirely different signal that is based off of an entirely different component, but it still used two of the key elements that I shared with you today. Okay. Someone's asking about Thinkorswim. Thinkorswim, as we see here, is for our strategies, but we can't apply it with a PET D. It doesn't work with PET D. Okay. Sorry for that. Which time frame do you suggest for trading for this strategy? Well, once again, this is all a personal preference. If you like a lot of signals in this strategy that I shared with you, strategy number 4, I would go to a tick chart, a 1,000 tick bar chart or maybe a 2,000 tick bar chart, because you're going to see a lot of signals, maybe anywhere from 5 to 10 throughout the day. If you want maybe 2 to 3 or 4 signals, then go to a 5-minute or a 10-minute chart. Okay. For a daily bar, you're going to get maybe a signal, 2 or 3 signals a month. Okay, so it all depends what your preference is. This is why we say we want you to become a part of the process. Everyone has different ways of trading. When I first started trading, I wanted tons of action. I wanted to be trading 20 million times within the day. Now, as I've gotten older, I only want to take about 2 to 4 signals a day, and that's it. So we, work with you to meet your needs. Let's see what the next question is. What guidance is provided on how to identify the best stocks to apply the strategy to? Above or below the 50-period simple moving average would yield a large group of stocks. Well, one of the best things with most of the charting software is you can apply this add-on to give you some type of screening. So you can apply it with TradeStation, I know, and with Metastock, and you can automatically screen for all the strategy number 4 signals for that particular day. So you narrow it down right off the bat. So instead of looking at thousands of charts, it's right in front of you. Maybe you had 20 or 30 signals. You can pick what are the best ones. Some may have, according to our risks, values, you may have larger risk with some and less risk with others, so that can determine which ones you want to take. So we share with you how to do this. We also provide you with what we feel are the best signals for the coming day in stocks, and also for E-mini as well. So we provide you with all of this, and once you learn how to use the add-on and see where the arrows are generated automatically, you'll be able to see for yourself, and it'll be a very simple process. It's something that takes me maybe no more than 15 to 20 minutes a night to look over the entire S&P 500. Not because I've been doing it that long, but because I know what to look for now. And this is what we want to stress with all of our members. We want you to get to that point. I don't want you to say, well, Steve, I don't know what to trade today. Tell me what to do. That is probably the worst case scenario you can be in, because that's almost a recipe for disaster. I can almost predict that you're going to end up losing money. Why? Because you took yourself out of the game. You don't want to make the decisions yourself. So what we want to do is have you become a part of the process so that you can see these signals on your own, okay? And it's fairly simple after a little practice. Let's see, Mike is asking, trade above the high or close of the previous setup bar. Okay, when we find a setup bar, in other words, if you're going long and you see a bar that closed in the top 25%, you want to see that traded above the high. So if it traded one tick above the high, doesn't have to close one tick above the high, doesn't have to close even above the previous day's high. Just if it trades there above the high, not the close or the opening, just the high of the range, then that's your entry, okay? Well, you may ask how to show how you can use the PET-D. Well, we shared with you that it's a short-term trend identifier. It's the Primo early trend detector. So, I mean, right off the bat, if you know that the short-term trend is down, in other words, with all red, well, my goodness, then you can apply a strategy number 4 very simply, very easily when all the bars are red. That's the basic way to use it. It would be that simple. So once you have these two tools, you're putting the odds tremendously in your favor. Not only do you have a consistent strategy, but if you have a consistent strategy where all the bars are red, that's another tool telling you that the odds are in your favor. You're going to go lower because the short-term trend is lower. Well, that's how you would use it according to these two strategies we just shared with you today. Okay. Where is the most profitable place to place a stop? Well, George asked. Well, George, we give you roughly anywhere from 4 to 6 different stop placements. Once again, it's up to you, but this comes with the course. We can't just share that with you because it wouldn't be fair for the people that spent roughly about $2,000. We're discounting down to $1,495 for you today. So become a member, and we share all the different ways. And then the best stop is the one that makes you feel comfortable. There is no best stop for any person. I use a particular stop that I know some of my members don't even use, and vice versa. It all depends on what meets your needs, and this is what we do. We teach you how to work with the techniques that I have accumulated that will meet your needs, okay? So the best stop is the one that makes you feel comfortable. It's time for just a few more questions before we have to leave here. Jeff is asking, which time scales do you use for this? I assume you mean which time frames. If that's what you're asking, you can use virtually any time frame. They work on anything. That's the beauty of these. That's what I stated in the beginning. The Strategy 4 works on any time frame, in any direction, and in any market. Carl is asking, does the PET-D work with candles? What does it look like? Well, we showed you a lot of pictures, Carl, what the PET-D looks like. I'll just go back real quickly. This is what the PET-D looks like. It's a color bar algorithm. When it's green, it's telling you that the short-term trend is up. And the minute it turns red, it's telling you the short-term trend is down. Now, it doesn't matter what the bars are. If it's I'll go back a little further here. Here are candlestick bars, okay? So it works on candlestick bars as well. That's a 5-minute chart of the Emini that was this Monday. So if someone wanted to see how it works on intraday, here was just 3 days ago, how you could have used this. Now, I'm sure just looking at this, couldn't you have had some really nice setups just applying this once you knew you were in sync with the short-term trend? Okay. I think we have time for one more question here. Someone says, can you post the Twitter link again, please? Yes. Write this down. It is at S, P as in Paul, C as in Charlie, LST, then T again, RADG. That's the abbreviation for at Specialist Trading, okay, on Twitter. And you can go there, but please remember that we don't post signals as they are generated. We tell you after the fact because only our members are privy to signals as they happen in real time, okay? We're not giving away those for just for everyone. You can see what's happened after the fact just so that you're aware of how we teach at Specialist Trading, but really it's more about becoming a member so you can learn how to trade. Remember, our goal, as I go here to the information page, is to teach you how to trade with the Specialist Edge, okay? Once again, if you're having trouble with your trading and you really want to turn things around in 2014, I strongly suggest you take advantage of this great discount we have, okay? Remember, you can work with our trading consultants. They will offer you a payment plan if you don't have the capital right now to purchase everything in one large sum. If you're really serious about turning your trading around and getting on that road to consistency, I strongly suggest you get these two great packages in one. We would usually sell these individually for roughly close to $2,000 or even higher than $2,000, but we're discounting them even better than that, down to $1,495. Okay, so I know firsthand what it is to struggle and what it is to get discouraged through trading. I know firsthand, trust me, I was right there with you when I first started trading on the floor. So all the things that turn my trading around are all the things that are encapsulated within the strategy and in Pet D. Okay. So I want to thank you so much for attending today, and I really look forward to all of you becoming members of Specialist Trading. Please contact us if you want to take advantage of this great special, but it's only lasting for 2 days, okay? Thank you so much. As you take one last look at our disclaimer, please give us a call or send us an email, and I look forward to all of you becoming members of Specialist Trading. Thank you so much. We'll see you next time. Bye-bye.